Cathie Wood released a 46-minute long video talking about economy, market, innovation, Bitcoin, and few other things on her YouTube channel of ARK Invest. Usually, I agree with Cathie's viewpoints, especially on Tesla. But this time in this 46-minute long video, I'm disagreeing with her on few points. I mean, she's giving timelines and talking about the shift in the market from value to growth. This market is too premature to decide on which direction it'll take. So in this video, I'll give you a quick summary of what she talked about in that 46-minute long video, but I highly encourage all of you to go to the ARK Invest channel and watch that video. But then I will also show you my research on why I do not agree with her on the July timeline. And also I'll share some charts which are also screaming what I'm seeing in the market. So let's get started. And if you like videos like this and want me to make more of these videos, then definitely engage with the video by commenting and also hit the like button so we can reach out to more like-minded individuals. And check out the link for Moomoo. That'll be the charting app that I use to trade and also share the chart with all of you on these videos. So sign up for the account and also get 3 free stocks. Links are in the description below. And also join our Discord and Patreon where we talk markets and also share my trades in real time as and when I make them. I also share why I'm not buying anything and what market are telling us. So take advantage of that and join our Discord and Patreon. Links are in the description below. Okay, so coming back. Let me share the screen and let's get started with what Cathie Wood has said. And I'm going to actually break it down in 5 different points that she made, and some of the points that I don't agree with and some of the points that I agree with. Okay, so right here, actually, let me switch this so we can see. Okay, all right. Okay, so over here it says monetary policy from 0.25% increase to 2.25, and that's what she talked about. But in that message, she compared the this time from 70s and 80s inflation time. Fed rate was 10% at that time and increased to 20% in one move. It was 1,000 basis point increase back in 17 and 80s. My first disagreement is we cannot compare inflation from where we are right now in the economy and what challenges we are facing back to 70s and 80s. A lot has changed in the market. A lot has changed in people's life, the way we see things, the way we live. A lot has changed from back 70s to 80s to now. So comparing, okay, this is what we did in 70s and 80s. This is what we are going to do now. In my opinion, is what's not the perfect, I would say, combination or a perfect way to compare the situations. Quantitative tightening will started last week. Dollar has not grown since then. This point I agree with. Second point, inflation, big deal for election year, which is absolutely 100% true. Shift to Republican House and Republican Senate is what she's saying, that we are going to see that shift because people are really tired of how badly it has gone. So there could be a chance of having a Republican House and a Senate. Great for telemed companies. She makes a comment about that how it's going to be good for telemed companies if we get the Republican House and less pressure on tech companies if we get the Republican House. I agree on the tech companies. Telemed companies, again, my opinion, too premature to come out and give those kind of arguments. Then she talks about the economy, and this is really good. So she talks about Tesla, JP Morgan, Morgan Stanley. Elon Musk comments about super bad feeling about the economy. Nobody knows what he means when he says he has a super bad feeling about the economy. Jamie Dimon, prepare for the hurricane, the huge comment he made. I have shared that how Morgan Stanley has came out and they have increased the recession from 5% to 35% in the next 8 to 12 months as per their indicators. And I made a video of that. Confluence of shock, Goldman Sachs president is talking about that he has never seen in his whole entire career of what he's seeing right now. Inventory buildup like never seen before. She's saying that she has seen some inventory buildup on the big retailers. And she gave an example of Walmart where she says that Walmart sales were up 3% while the inventory was up 33%. And she talks about how that more than half of Walmart revenue or shares or of the revenue comes from groceries. And there is no inventory buildup in groceries. You cannot store milk and eggs for too long. So now she's talking about that the actual inventory buildup is a lot higher than 33%. She's talking about close to like 80%, which is massive for Walmart. That's on economy. Then she talks about market signals, where I basically talk about, or I basically disagree with what she's saying in these points. She's talking about economy may enter a recession where the Fed may not do or may stop the increases because we are going to go very hard landing. And she talks about how we will flip from the value to growth. That's number one point, which absolutely you cannot sit back in today's day and age, in today's time, and predict that we are going to flip away from value to growth in next 4 to 5 weeks. This is a huge statement to make. Number two, housing and auto down 20%, not a soft landing as per Cathie Wood. Ad sensitive companies is going to take a hit. So basically TikTok taking the share away, where we are seeing Snap, Google, all these companies is basically going to really take a hit in this economy as we get into recession or as we get into the next few months. Bitcoin, first time in the history, 9 consecutive weekly declines, which is a huge thing for Bitcoin, has never done it. And she contributed to Luna crash, which I agree. Bitcoin is down almost 57% from all-time high. The 200-day week moving average is sitting, or support is sitting at $22,000. So she's talking about how Bitcoin can go down to $22,000. But at the same time, she's talking about how short-term holders have capitulated, and which is a good news. As per their model, the Bitcoin, all those who had weak hands or short hands have actually like sold out at these price levels, which is a good news. Long-term holders are at all-time high of 67.5%. So people, those who are holding Bitcoin, are at all-time high, which is also bullish news for Bitcoin. But the price target that she's giving, where we have the absolute support, is at 22K. So we are not, of course, there yet. It's flirting with 30,000 right now. Bitcoin futures are selling at a discount, and she expects the volatility to be in the Bitcoin market, but the volatility will be on the upside, not for the downside. So again, this is a bullish statement from Cathie Wood talking about Bitcoin. Then she talks about timeline, which is the second point, which I will discuss in detail, and then I will show you some data which kind of goes against what she's saying. So Fed will do this. So she's saying that the earnings will come out in July, and Fed will get the message and they will stop the hikes. So she's saying that, yeah, we are going to get the 50 basis point increase in June, but then that will be the last, because we are going to see these earning seasons come out, and Fed is going to get the message that, hey, the US economy is in trouble, and they will basically stop hiking the rates, and it's going to be really, really bullish for the equities market starting July. So that's the timeline she's giving for July for equities market, when we are going to see that turnaround. And she's saying that we are in the bear market right now, and Fed will start talking more dovish as we go into the earnings season, and also as the equities or the companies will come out and give their earnings. So when she's talking about these points, there are a few things that stood out to me. Number one, that we cannot sit here and say it's going to be bullish or this equities market is going to turn in July. That's number one. Number two, we will flip away from value to growth. In my opinion, it's a very not proper statement to make. Again, not proper statement to make where we are right now. Take a look at what's really happening with the US consumer. We have seen time and again where people are coming out and they're saying, US consumer is very strong. We are spending the money. They are going out and spending the money. We are not going to go into recession because the economy is so strong. We are spending the money. This is spend trend. If you can see clearly, yeah. I'm going to actually go out so you can just see the whole chart. Okay, so this is spend trend, and this is final and most recent spend trend of how people are spending money. Look, the credit spend right here is basically 25.9 to 24.2 in just 1 month, and it came from 32.4 in February of 2022. In January of 2022, it was 27 because again, January is the slowest month because people just come out of December spend and November spend when they were basically buying gifts for their friends and family. And then from there, that's why we see January as a slump. And then it picked up in February, and then in March and April, it's been slowing down. So the people are using less credit cards as compared to just a month ago. The PIN debit is also in negative. It was really high in negative in March of 2022, negative 8.4, but at least now it's negative 5.8. It little improved from March to April right here. Okay, signature debit is actually went up. So credit spend or credit use went down because people don't want to put too many things on their credit card. Okay. And they're using a little better of their debit card. That means the cash that they have saved up, they're using a little bit more of that. On top of that, this is the US transaction. This was the dollar value growth year over year. This is the transaction growth. Look at the transaction growth. Transaction also slowed down, of course, with that right here. And transaction for PIN debit improved because the transaction for PIN debit in terms of volume growth also improved. Now, if you see over here, this is a US dollar volume growth total by industry standard right here. We have seen retail went down, negative 2.5 in basically April, and then May is negative 1.8. That's where economists are seeing, and they're saying, well, US consumer is coming out and spending money. Okay, pay attention to this number right here, negative 2.5 to negative 1.8. But look at gasoline, right? Gasoline is so high that in March we had almost about 37.7%, in February 40.8%, and now in May we have actually reduced, in April we have actually reduced from 35.9%. Now summer is here, people are going to spend money in gasoline more, so this number is not out yet. It's going to come out for May, and we are going to see, of course, the trend go up because of the summertime. Now, the reason why I'm sharing this data with you to show two things. Number one, just pay attention to this right here, okay? The credit usage, the volume growth, dollar volume growth went down. The credit transaction growth went down, right? Now, the next chart I'm going to show you is basically how much loan each credit card company is holding. Okay, so card loans over here, it says 58, and over here card loan in April of 2022 is 59.8. So the loan amount has gone up while the transaction amount has slowed down. Okay, so when people say that US consumer is strong and they're spending more money, if you pay attention over here, US consumer is strong right here, but this is a sign of weakness. This is not, right here is a sign of weakness. Yeah, they are spending more money in retail, negative 2.5 to 1.8 as compared to the last 2 months. Yeah, they're spending more money because it's less negative in the month of May. But if you pay attention, in April, their balance went up in all fields. Card loan Discover 72.9 to 74.2, portfolio 183.3 to 186.3. So their loan on their credit card went up. Okay, now but the transaction rate went down, the percentage went down. So that means that they are not paying back the loans that they have, and they're keeping the loans for longer on their credit card. And this is not a good sign for the economy. That means people are not really spending money. They are basically not paying off the credit card. Yeah, they're spending money, but the money that they don't have, and they're putting it on the credit card. And they're holding the credit card loan for longer, which is of course a sign of a weak economy, not good economy if you compare month over month. I'm not talking about that, we are not spending money. Yes, we are spending money, but if you see the trend of what's going on over here in the past few months over here, you can see that the credit was actually, over here 30.2, and then again November, December is higher. It actually went up in March, and then in February, in March it went up, and then it came down. If you look at the spend trend, was that we had like 56.6 to 56.8 in February right here. Okay, it didn't change much, but the credit card was going up, or the usage was going up. So that shows, okay, the consumer is spending more, but they're paying off their loan more, which is a healthy sign of a healthy economy. But if they're spending less right here from 25.9, or let's say from February to March right here, from 32.4 to 25.9, that's a big drop in the usage of credit card or the growth of the credit card. And the balance actually went up from 56.7 to 58. So this clearly shows that the weakness is growing, and it's concerning, because this weakness, once we get out of the summer months, see, I don't understand. Everybody is talking about how US consumer is spending money. Yeah, of course they're spending money, because this is the time when kids take vacation, when families take vacation. They've been hibernating for the winter months, and now they're going to go out. So very certain sectors are doing well right now. Not all sectors are doing well. Certain sectors in the economy is doing well. And that's what they're showing over here, that certain sectors are doing well. But overall, there is a weakness that we see in the economy, where the balance on credit card is increasing while the transactions are coming down. So this is a very interesting view, or very interesting chart in my opinion. And that is why when I'm seeing this data, I don't personally agree with what Cathie is saying, that we are going to see the economy shift in the next few weeks. In July, it's going to be really bullish for the growth stocks. There are certain growth stocks that are gone for a very, very long time. I don't believe growth stocks, Matterport, one of them that comes to my mind, Robinhood, another one that comes to my mind, that they're going to take a long time to recover. Because they were so high, the valuation was so high, and now they have come to the ground. It's going to take a long time for them to recover. They cannot just come out and starting July, there's a switch or there's a flip in people's head and say, you know what, nope, everything is great, everything is awesome. We are going to go out and we are going to start buying Matterport, we start buying Robinhood and all those things. They're not going to do that. Any kind of bounces we are going to see, it's going to be met with selling. Because people have lost so much money that they will come out and they are basically going to sell out and take profit. And I don't blame them. And that's why giving a general statement about how we are going to see the shift from value to growth, that's not going to happen for the whole sector. Yeah, for certain stocks, they might do well. I don't think what Cathie is saying is going to be huge for Teladoc. Teladoc is not going to be a $200 stock or $300 stock anytime soon. That's going to take a long time, because again, one of the main arguments that I have for Teladoc, and by the way, I own Teladoc. I bought Teladoc in 2020. It went up 60% and I still didn't sell it. I mean, again, the lessons that you learn in these market conditions. And now I'm down like almost 50% on that thing. So I feel that companies like Teladoc, what special IP they have that a Kaiser Permanente or a Blue Cross, Blue Shield might not come and start their own thing. And that's what the thing is. If they come out with so innovative way of having okay, they're checking blood on the phone, I'm just saying, that's a different story. But companies like Teladoc have come down from their recent highs, and they are basically now waiting for a flip or a change in the investor sentiment. That's not going to happen very soon, especially how much we got burned. So a statement like that, I feel, is very biased of her holding the shares that she's holding and basically giving out. And that's why, even though I hold Teladoc, I hold Matterport, I hold Robinhood, I hold all of those losers as well in my portfolio, but I'm not spending a dime on it to buy more shares of it to bring my average down, as some would do. Because I feel I want to bring my average down on the stock that I know is going to have a very huge turnaround in the near future. SoFi is one of them. And that's why I make videos on SoFi. That's why I'm bullish on SoFi, because averaging down on that stock makes sense. So again, this is what I think, that when Cathie Wood came out, and this was my weekend, binge watching. I actually watch I actually rewind some of the sections to understand what she was trying to say. And then I'm looking at this data and I'm like, no, this is not correct, because I don't see that happen, And S&P, I still say, and I've alerted my Discord members about that, I see S&P touch 3,500, and I still hold that, because we are going to get negative earnings by some of these major companies in July, Q2, and they're going to lower the guidance because the money is not going to come back quickly. So it is going to be an interesting next few weeks, next few months. Now, I have said many times that I feel that we are going to hit the bottom in the stock market towards the middle of June, and I still hold that thought. Yes, we are going to trade sideways for a very long time, but we cannot always time the market. So for me, I will be buying more shares of the money that I have on the sideline in the next week, this week, next week. This is the time when I would be doing my buying, because I think we are going to see some massive volatility in the stock market. See, the CPI number comes out on June 10th. The FOMC meeting happens June 15th. There will be some short covering before CPI. That could be today, that could be tomorrow, but there will be short covering. I'm recording this video right now. It's at 6:30 in the morning, and I'm seeing pre-market, everything is looking better, green. I haven't checked last time. Last I checked was like 4:30, but let's see here. Yeah, I mean, look, Tesla is up almost, I would say, where is it? There. Tesla is up almost 3.76%. Apple is up almost 2%, 1.55. Google, Amazon, everything is looking green over here. So far, everything is looking green. But this is, in my opinion, any bounce we see today, tomorrow, is just a short covering, before the CPI data, and we are going to get hit. And if we see any increase in the core CPI, I'm going to make a CPI video as well, but if we see any increase in the core CPI, we're going to get screwed big time, because they're going to come out and people just, the sell-off is just going to accelerate. And remember, the gas prices have fluctuated a lot. So the energy, which is not included in the core CPI, which is a good thing, is going to see that up increase, because it wasn't that high in the last CPI time. So I hope that what she's saying is true. I really hope so. But my data or my research doesn't show the same model as she's seeing that we are going to see that flip in as early as July. I think we are in the sideways market for a very long time, and then eventually we are going to see a little flip into the growth side, but only selective growth companies. Not all growth is going to go scream up and go up. I hope I provided some value, and if you like the video, then definitely hit the like button, and also comment about your thought if you have seen Cathie Wood's video on what are you thinking that the statement that Cathie Wood made, or you think that we are going to see a huge bull market or growth shift in the growth stocks come July. Definitely let me know in the comments. And also for free stock, definitely take advantage of 5 free stocks from Mumu, and the links are in the description below. And for more one-on-one conversation, join our Discord and Patreon. Links are also in the Discord below. Thank you for joining me, and hope you have a wonderful week. Until next time, you all have a sparkling day.